And joining us from Princeton, New Jersey, we have Bob Dahl, Vice Chairman and Chief Equity Strategist at BlackRock, which is the world's biggest asset manager with over $3.33 trillion under management. Bob, good to see you. Now, are you dealing with the heat better or the volatile markets these days?
I'll tell you what, it's been hot in both places, as you know. I think that the cross currents in the market, the big question, double dip, yes or no? I think that it will take some time for the markets to answer that question. And we're in this trading range between 1020 and 1220 on the S&P 500, where we've been for 9 months now. And the answer to that question will determine which way we break. My view is that we will not have a double dip and that we will work our way higher, but maybe not just yet.
Okay, not just yet. What kind of catalyst are you looking for that may push equities higher from here?
Well, you in your introduction talked about it. Earnings is obviously a key. I think we can get through the second quarter with earnings reasonably good, revenues reasonably good versus expectations. That will be a good down payment on getting out of what ails us in this period. I think we also need to get through a few more weeks, maybe months before we can see that we can get through the credit situations of the world without too much trouble. And you put that together with pretty cheap valuations and we'll get stocks to go higher.
Hey, Bob, let's talk about earnings season so far. You know, we got some two big misses on the Monday with IBM and TI disappointing the markets. How do you read the earnings season so far?
Well, so far it's better than average, but not as good as the first quarter. And therein, I guess, is going to lie a dilemma. The bulls will point to, well, there are more positive surprises than otherwise. And the bears will say, yeah, but the momentum's going in the wrong direction. And we'll have this back and forth, and maybe we'll have to twiddle our thumbs to the third quarter earnings. I hope not. But they're okay, but not great, I think is the right way to put it.
Okay, they're okay, but not great. What about financials right now? You know, we're seeing some problems with a lot of the financial names, which were underperformers in BlackRock's view at the beginning of this year. But how disappointed are you with the likes so far of Bank of America? And what are you expecting for Goldman Sachs?
Well, our view is that the banks will continue to struggle. There are revenue problems. The earnings have come through generally okay. It's just the top line is not growing. These companies in their many businesses are not extending themselves. The absence of lending is part of that. And when you couple that with balance sheets that still need some repair, you get pretty lackluster results. To repeat, the bottom lines have been okay for most of the banks. It's the top line that's disappointed.
Yeah, what about the tech sector, Bob? I started off talking about the disappointments for IBM and TI, but, you know, Intel looks pretty good. We're still waiting for Apple this week as well.
Yeah, I think you hit the nail on the head. It's mixed. The Intel results, I thought, were off the charts. I think they did a really good job across their businesses. Certainly the bottom line results, people said margins can't go higher. They did. I've yet to digest the IBM or TI earnings that you referenced. I'm aware that they were somewhat disappointing, but we'll have to check into those details. And I think when all is said and done, tech will have put in an okay, but unfortunately mixed quarter.
Okay, now, Bob, let me talk to you about cheap valuations out there, because at the beginning of the year, we had BlackRock saying that U.S. stocks would outperform cash and treasuries. What's the view right now? Yeah, they're cheap, but do we have the economic fundamentals to drive stocks higher from here?
Well, therein lies the question, double dip, yes or no. If there is no double dip, and if this is just an ordinary second-year cyclical slowdown, which is my view, stocks will have a better second half. Conversely, if this is the proverbial, I shouldn't say proverbial, we hardly ever have them. If this is a double dip, well, then the earnings will disappoint into the back half of the year, and stocks won't be able to get it out of their own way despite their cheapness. We do think that valuation underpinning does suggest risk is limited, but you need some good news to have the reward side of the equation heard from.
Okay, Bob, quickly, I want to talk to you about emerging markets, because BlackRock at the beginning of the year also said that emerging markets are going to outperform as emerging economies seem to outperform themselves. What about now when there are doubts about the sustainability of China's economic growth and whether or not it can be the engine of growth for the global economy?
Well, our view is that China is, as ordered by the officials, if you will, slowing somewhat. But you look at the first quarter, 12 and a fraction, the second quarter, 10 and a fraction. Maybe the next one will be 8 and a fraction. That's still the envy of the world in terms of growth. China is a potent force of growth. We'll be watching it carefully, but we do think they have the muscle to help continue the emerging markets being the leader of the world growth scene.
Okay, Bob, break it down for me. Let's be clear here. Where are you putting your money at BlackRock these days?
Well, geographically, we think that because of the significant stimulus coming out of Washington, D.C. over the last couple years, that the U.S. economic recovery is not over. So we're overweight the U.S. within the developed markets. Japan and Europe slightly underweight. We are overweight, but not as much as we were the emerging markets. Our preference is to play them through the multinationals, where we think the risk-reward is intriguing. Long-term, we do like the emerging markets, like so many. Stronger growth, absence of the debt noose around the neck, as the developed markets tend to have.
Okay, Bob, keep cool. Nice talking to you today. Thanks for that.
Thank
Bob
you.
Dahl,
Have a good one.
Vice Chairman and Chief Equity Strategist at BlackRock.